and also Alex. Alex, you want to do a quick intro?
Hello, good afternoon, ladies and gentlemen. This is Alex from MarketWise Asia. I think since the start of the day, we have a various topic. Jay talking about the market outlook, and the latest session just now was actually talking about the Hang Seng Index. Okay, and then Hazel talked about the fundamentals of the companies and a little part of the technical analysis. Okay, and yeah, today right now, Rusmin is talking about the dividend investing. So all the various topics are coming into play right now. And yeah, I hope you guys have already had your lunch. So sit back, relax, and enjoy this session by Rusmin later. So back to you, Jeremiah.
Yep. All right. So of course, going into our session, one thing that I do have is a couple of house announcements. So let me just go ahead and share my screen right now. And all right, so as you can see, like I said, this is our first event of the year, Market Insights Virtual Summit 2024 Q1. First quarter of the year, we're only into January, and of course, as I mentioned earlier before as well, it's definitely something that we want to get right 2024 in order to have a good year. We want to make sure that we have the plan with the right strategies set up for having the best 2024 that we can have. And so we're kickstarting the year right with our first summit event. Of course, this is hosted by MarketWise Asia and also supported by our relevant media partners that you can see on the screen, all right? Now, one thing I want to let everyone know as well is that this event is in conjunction with Plus 500, who are our event sponsors, and we're really thankful to have them on board with us. If not, this event would not be possible without them, all right? So let's go straight into a couple of things. So first of all, our community channels. So we do maintain quite the community where we actually share information about market updates. We share about different trading strategies. What are some learnings, insights that we have, and it's really all to help build each other up as a better trader. And to do that, we have different platforms. The first one, of course, is your Facebook, YouTube, Telegram, as well as Twitter. You can see on the screen right now, Alex has also shared a couple of links for you to go and follow. If you guys have not followed or joined those channels, I do highly encourage that you guys join. And in fact, Alex does a weekly Monday night market outlook catch up. Is that correct, Alex?
Yes, that's right. So every Monday evening at 10:30 p.m., I will do a late night market talk, okay, to be hosted on the Facebook and also on YouTube. So do follow, like, and subscribe to especially our Facebook and YouTube channel, so that when I publish or when I stream, okay, you get notified, okay? That'll be very important. So every week I'll do the market outlook, check with some trade ideas and what's happening in the market, okay? So I already posted the link in the chat. Back to you, Jeremiah.
All right, thank you, Alex. So moving on next, so as I mentioned, our event sponsor for today's summit and tomorrow's summit as well is none other than Plus 500. And we've actually worked together with them to offer a very interesting promotion for all of you guys. And of course, before I go and talk about the promotion, just a little bit more about Plus 500. If you guys have not heard of Plus 500, Plus 500 is actually one of the global CFD providers. They're also, publicly traded in London on London Stock Exchange, as well as part of the FTSE 250 index. All right, so a very, very big company with steeped in history. All right, and in Singapore specifically, they do have an office. They're also licensed by MAS, Monetary Authority of Singapore, and they also have a very, very user-friendly platform with both a desktop and a mobile application that allows you to essentially use trading on the go. And they also have the same tools, the same instruments. Instruments-wise, they do feature over 2,000 instruments from indices, forex, crypto, options, multiple different asset classes for you to pick from. They also feature zero commission, as well as the new and exclusive insights feature on Plus 500, where you can actually view and analyze what other traders are doing in their own trading strategies. Okay, so that's definitely going to be very helpful for learning. If you guys have seen Plus 500 somewhere, Probably because they are actually sponsoring multiple sports teams around the world. Yeah. So if you guys follow football, then they do actually sponsor Young Boys, who is from Switzerland, and they also sponsor Chicago Bulls, who is based in the United States, playing in the NBA. Right. So definitely a very very reputable CFD provider. And if you guys are looking for a CFD provider, this is definitely something you should consider. Now, in collaboration for the event, we have an offer running where if you actually open an account, you will definitely receive, first of all, the copy of the Seasonal Vantage FX report. This is the February report that's worth about $48. And you also get a Chicago Bulls cap. Plus, if you put in the $500 deposit into your newly opened account, then you'll also be able to receive the $250 bonus pending the terms and conditions. All right. Best way to find out more about this offer is actually if you go down to our virtual booth page and you scroll down to the middle of the page, you'll find the offer over here. As I mentioned, the cap as well as the 250 Singapore dollar bonus. And all you need to do is create your account and also fund the account with a deposit of 500 Singapore dollars. And as you can see here, when you are funding the account, please remember to use the bonus code, which is Summit 2024, right? That's how we know that we'll be issuing you the relevant bonus plus the Chicago Bull cap. Alex, anything to add?
Yeah, so if you are residing in Malaysia, not to worry, this offer is also for you. So for Malaysia, okay, you only need to deposit 1,005 ringgit and you also get to receive the bonus, 750 ringgit bonus, but of course, terms and conditions apply. But the Chicago Bulls cap, you also get to receive them as well. Okay, and funding is quite easy. So, you can fund by credit card and just insert the bonus code and that will be pretty simple and done. Okay, and back to you, Jeremiah.
All right. So with that, that's all that we have in terms of announcements. We can jump straight into our session. So of course, this session is delivered by Rusmin. Rusmin is the investor and the co-founder of The Fifth Person. And his investment articles have actually been featured. As you can see, Rusmin just turned on his camera. But a bit more about Rusmin, his articles have been published in the Business Times and Asia One, and it's been featured on national media like Channel News Asia, 938 Live, Money FM, specifically talking about his views and insights on how to invest successfully in the stock market. Of course, Rusmin is also a former SIA EC scholar that actually gave up his scholarship. So there's something interesting that maybe Rusmin can share a bit more later to really follow his dream or his itch of learning how to be a better investor and really lead a life of financial independence, which I think most of us are here to do. And he does believe that anyone can achieve financial peace of mind as long as they're investing intelligently and also safely for the long term. So today, Rusmin is going to be talking about how to build a 5 to 6 figure dividend portfolio that pays passive income for life. Okay, sounds very interesting and also very different to the other chats that we've had earlier today. So with that, Rusmin, do you want to say hi to everyone first?
Hi everyone. So yeah, thank you Jeremiah for comprehensive introduction of myself. And then now I can put on my portfolio now and feature on MarketWise.
Exactly.
Okay, so
well, Rusmin, we're very happy to hear from you. So we're going to pass the time over to you, and then we'll catch up with you shortly after for Q&A, all right?
yeah, thank you so much, Jeremiah, and of course, Alex, for inviting Fifth Person. Okay, so hello everyone. So thank you so much for tuning into this session. Okay, so my session, I'm going to share with you how you can actually build your passive income. Okay, basically your dividend portfolio that's going to pay you, passive income in years to come. Okay, so in the next hour or so, okay, I will be sharing with you on why I think dividend investing is one of the best model, okay, for retirement. Okay, so you are looking for a perfect retirement, dividend investing. Why is it the good strategy to use, right? And of course, how you can actually identify the best dividend stock that can actually help you to grow your dividend portfolio. And of course, I'm going to show you how much you can make by investing in dividend stocks, okay, and how you can actually grow it by with like let's say $10,000, how much can it grow it 5-figure to 6-figure? Okay, and I'll use some of the real life case study and example just to show you my point. Okay, and of course, in the next hour, okay, just sit back and relax, listen to my what I have for you installed. Okay, just listen and sit back. Okay, and of course, if you have a question, I will try to answer them if I have the time. Okay, so again, let's move on. Okay, I just want to keep going because I have a lot of things to actually share with you in this session. Okay, so I think the introduction, Jeremiah pretty much done it, so I'm not going to spend time on here. Okay, but I think nowadays you probably have seen us on YouTube, okay, where we're actually a lot more active over there. Okay, and over the years, of course, we also recognized by SGX for one of the best independent investment website to go to. Okay, if you want to learn long-term investing, like your value growth investing strategy. Okay, so as usual, I think my session, I'm going to highlight some of the listed companies, yeah, either in Singapore, Malaysia, or even Hong Kong. Okay, so anything that I share here is only for educational purposes, right? So it's not a recommendation to buy or sell. Okay, I need to put this upfront first, okay, because some of you, all right, might start to say, oh, Rusmin recommended that stock. Okay, so yeah, okay, so just to put it upfront, just for sharing my experience and how you can actually learn it and use it to make money for yourself. Okay, so we do have our own dividend portfolio, and specifically, I think we do have one portfolio where we invest in income stock, 100% of the money that we have. Okay, here, and so over the years when we started this portfolio, it was in 2015. So it's been almost 8 years since then. Okay, and now I think of course we are still invested. We are holding on to 30% cash, but this is likely going to deplete. The cash is going to drop because I'm seeing a lot of opportunities right now, especially in the Hong Kong market. Okay, so but over the years, I think we have buy and sell, and these are some of the companies I censored them just in case you own some of those companies and you think that we sold, you also want to sell. Okay, there are reasons why we buy into certain company, and there are reasons why we sold into certain company. Okay, so you can't simply blindly follow us, okay, because of that. But what I want to share with you is that over the years, I think we have achieved a return of between 10 to 12% in return on a year-to-year basis. Okay, so I know some of you here might think that, oh, Rusmin, 12% it's too low for me. Okay, I'm looking at 24% or 50% or 100% year-on-year return. Okay, so well, when it comes to dividend investing, I think I'm very happy if I can get 8%, 10%, 12% on a year-to-year basis, because this is my personal goal. Okay, and so far we have been able to achieve that. Okay, and let me share with you. Don't underestimate this 12%. Okay, so I think I show you through a long-term basis. If you keep on doing the same, you're getting the same result. This is how much you're gonna get. Okay, so I just assume that if I invest $10,000, right, and I project I'm gonna invest in the next 50 years. Okay, so with $10,000, if you compound at 12% a year, okay, in the next 10 years, your $10,000 will become 30,000. Okay, you can't see it here, okay, because it's in 500,000, right, column, right? But then if I drag it for another 20 years, the $10,000, okay, without any injection of capital, it's going to end up with $100,000 here. Okay, and if you drag on the 30 years, you keep on compounding the same amount of money. Okay, you're going to end up growing to $300,000. And of course, the longer you drag, the more money you're going to get. Okay, so this is just to show you the power of compounding interest. Okay, I think most of you probably know that what is the power of compounding interest. Okay, and yeah, of course, hi Sadie. Okay, just get to see the chat. Okay, because I was too focused on the presentation. Okay, so now showing you this basically just to share with you that the power of compounding. Okay, that's one thing, and secondly, you don't underestimate this 12%, because if you can consistently compound it over time, you can really grow the amount, the snowball, the amount that you have in the portfolio over time. Okay, and for me, I am able to achieve that 12%. I'm very happy. Okay, I'm not sure about you, but I hope this, I think compounding the amount of money that you can make, okay, with just 12%, it will snowball over time. Okay, so if I can do it, okay, so can you? Okay, so I think not just me, even for our students, okay, those who have used the same strategy on dividend investing, on how to pick stocks. Okay, like for example, I think Jacob, I think he also joined, I think in 2017 or 2018. Okay, he was just started back then. And after he started to do dividend investing strategy, also it works well for him, and he's now actually getting about 10 plus percent. Okay, so this is and he started from scratch. Okay, he didn't have finance background at all. So okay, so he started to learn everything from scratch, and even like Sharon. And I think I remember Sharon, he actually run a blog I think, investment blog. He also joined us since day one. And I think until today, I still see him. Every time when we have a webinar or with a meetup, I still see Jaron. Okay, so he's seen the result himself. Okay, so I think now most of you will ask is, okay, why dividend investing, right? So now let me share with you why I think dividend investing is perfect, especially for retirement. Even if you're not looking for retirement, it's really a good strategy for you to build passive income. And what I mean by passive income means that you are getting earning money without doing anything. Okay. Yeah. So now the first benefit of dividend investing is, of course, you're going to start to receive multiple stream of passive income when you start to invest in stocks. Okay, and those stocks typically they pay regular dividends. Okay, so could be once every month or once every 3 months, depends on what stocks that you buy. Some of them they pay every quarter, some of them every 6 months, and some of them are every year. Okay, so if you buy different stock then their payout are different. You can actually time perfectly that your passive income can come in like on the month-to-month basis. Okay, so I think you have to ask yourself whether do you have any passive income right now. Okay, so basically, if you stop working, do you have any money that was still coming in? Okay, if the answer is no, it's better to do something right now. Okay, so and then of course, dividend investing is a strategy that you can actually consider. Okay, so of course, as a dividend investor, your goal is to grow that dividends, right? So that you can actually ultimately cover your monthly expenses. And then eventually, of course, you can do FIRE, okay, financial independent and retire early. That's what they always say, right? And so that's the first benefit of dividend investing. Okay, you're gonna get passive income. I think this is very straightforward, right? Second thing is that if you invest in the right dividend stock, okay, you start to see that the dividend that you receive will grow over time. Okay, I'll give you an example later. Okay, and you don't need a big capital. Okay, you don't need a big capital to retire or build a dividend income strategy. Okay, so in fact, a lot of times people say, oh, dividend strategy is for old men, right? I mean, oh, uncle, they got a lot of money, then you can use it. Right? For young people, it's better go for capital gain. I will show you later, okay, why dividend investing is also good. Okay, just by giving you some example. Okay, so when you invest in stock, okay, you are investing in business. It needs to start to change your perspective. A lot of times people go to stock market, they just want to speculate, right? And they want to make a quick bucks. Okay, it might work, okay, but the chances are 50-50, right? So you might make money, you might lose money, right? And of course, when we invest in dividend stock, we are investing in business, and business, as you know, is the best hedge against inflation. Okay, so I think all of you probably know now, last year or a couple of years ago, inflation is something that we should be worrying about, because every year, things just get more expensive. And why things become more expensive? Because businesses are charging more because their cost has gone up. Okay, so they need to charge more to pass on the cost. Ultimately, we are the consumer that absorb it. Okay, that's why a lot of businesses, if you invest in them, they are able to raise prices. Okay, of course, not all businesses are great. Okay, so you need to know how to identify good businesses. And I'll show you a couple of examples later on. Okay, so this is the second benefit, right? So if you let's say receive a dividend of 1,000 a year, okay, and that's a small amount to start off with first. Okay, you can see that 1,000 grow over time. Okay, I will give you an example later on. Okay, and the next benefit that you're gonna get, of course, is the tax, right? So the beautiful part about investing in stock market, especially in Singapore, Hong Kong, is that you don't need to pay tax, right? If you own physical property and you rent it out in Singapore, you have to pay tax up to 20% of your rental income. Okay, depend on the quantum, of course, right? This is tiered. But for stocks, no matter how much you own, let's say you own 10 million, right? You receive 1 million in dividends every year. You don't need to pay a single cent on that. Okay, that's for your information. Even for Hong Kong, unless you buy some Hong Kong share, which A share or the Chinese stocks that are dually listed in China and Hong Kong, okay, then those could be subjected to 10% withholding tax, which is still reasonable. If you invest in, of course, US for dividends, which the yield are not fantastic anyway, okay, I don't invest in dividend stock in the US, the withholding tax that you have to pay is about close to 30%, okay? In Singapore, in Malaysia, okay, and also in Hong Kong, it's tax-free, okay? Of course, in Malaysia, I need to put a caveat there. If you invest in REITs, there's a 10% withholding tax on the dividend. Okay, other than that, capital gain tax, if you make money there, it's free from taxation. That's the beautiful part of investing for dividend, right? And Next is that this strategy is very easy to learn and master. Okay, so you don't need to have a prerequisite background. You don't need to have accounting background. You don't need to be a CFA, chartered financial analyst. Okay, or you don't need to be in the finance industry to start to invest in the stock market. Okay, there's a misconception there, right? So as long as you pay attention in my session and of course the rest of other speakers, okay, and apply what you have learned, you're actually good to start your dividend portfolio. Okay, I'll share with you some of the steps later on, right? And of course, there's no prediction involved. The thing about some other strategy, even for the growth investing, you actually need to assume certain growth for the stock that you're going to buy, right? But for dividend, you don't need to assume, because if you invest in a stock that gives you 6% yield, 7% yield, or even nowadays you can find 8%, 9% yield in the Hong Kong stock market easily, okay? You don't need to predict, okay? Because those stocks, if you analyze them, if they are good, they have a resilient business model, all right? They can pay you that amount in that year, okay? You don't need to predict. Okay, so and the thing about prediction is that there are a lot of moving parts. Okay, that's why some people are not comfortable predicting things, and it's not difficult. It's not easy to predict anyway. Okay, so when you invest in good businesses, these good businesses, when they make money, they will pay dividends, and then you just get a dividend. Okay, so basically there's no forecasting. Okay, so the risk investing in dividend stock is that it's a lot lower, okay, as compared to a lot of other strategy. Okay, that's why some people prefer dividend investing strategy, because there's no, during the crisis, they still get paid the dividend. Okay, so that's why they love it. Okay, and of course, you will get paid for life, regardless of crisis. And of course, I'll teach you a strategy on how you can actually continue to receive many dividends through different type of stock. Because some stock, for example, COVID-19 will get affected. Okay, of course, you need to diversify them. Okay, so but if you build a diversified portfolio of dividend stocks, okay, you will get paid for life. Okay, and that's why I think dividend investing is a perfect model. Okay, if you are looking for retirement, you have capital lying around, okay, you actually can get paid investing in dividend stock. Okay, so over the next few slides, I'm going to share with you my secret to building a dividend portfolio itself. Okay, so before I go into the secret, maybe I just share with you what inspires me, okay, to start investing and build dividend portfolio. Okay, and here actually I knew of a friend, and he always travel. Okay, so last time 10 plus years ago, there isn't WhatsApp. Okay, so every time I try to call him, is when you call someone and he is overseas, there will be an overseas ringtone, right, from Singapore. And every time I call him, this fella is like traveling, right? He's overseas. And when he pick up, yes, Rusmin, yeah, looking for me. I say yeah, and I asked him whether he's free for catch up, and he told me that, oh, sorry, I'm at Mauritius. Okay, I'm diving trip. I'll be back next week. I'll catch you up again. Okay, so I have called him many times, and over the years, every time I call him, he's overseas. Okay, Switzerland, Australia, Switzerland, and in fact, he told me that he needs to come back to Singapore to take a break. Because he is traveling all the time. Okay, so when he comes to Singapore, it's his rest time. Okay, so and the interesting thing is that he isn't come from a rich family. Okay, he wasn't born a silver spoon, right? And basically he worked really hard. He studied. He also quite smart, right? And of course his profession is also a lawyer. He also made quite a good bucks there. But and I actually started asking him, right? How do you do it? Okay, so one day he shared with me that actually his secret is very simple. He just invests in dividend stocks. He put his money, and he started like 20, 30 years ago when I first knew him. And of course now it's like 30, 40 years already. Okay, he has been doing that. And he put his money every time he earned money in, and then he just keep on buying dividend stock. And especially when there's a crash, he bought even more. Okay, and that dividends that he received from those portfolios that he built 20, 30, 40 years ago, okay, or are actually able to fund him now for all the travel expenses that he has been incurring. Okay, and he doesn't need to work. All right, he works when he wants to, not he needs to. Okay, and yeah, so that's why and of course over the time I started to ask him what the consider good dividend stock, and I learned from him, and this is where I'm going to share with you the secret. Okay, how he actually built this dividend portfolio. Okay, and you can actually copy as well. Okay, so the first secret that I going to share with you is, of course, how you can actually grow a 5 to 6 figure passive income portfolio. Okay, so if you are starting up, I first started out with zero, right? And I started my first income, and I also earned typical normal average Singaporean salary. In fact, lower when I first started. Okay, and I save up and I invest. My first stock, I think I pour in like $4,000, and over the years I save up, I even invest even more. Okay, and I wanted to show you how you can actually start small and grow big over time. Okay, so now if you so when you invest in dividend stock, okay, there are two things that you need to take note. All right. So first thing is that you need to find companies that are able to pay you not only just dividend or consistent dividend, but also growing dividends. Okay. And when you find companies that can pay you consistently and growing dividends year after year, okay, basically the companies can grow their earnings and they are the one that can actually give up more dividends over time. Okay. And that will usually leads to higher share price. Okay. Because when the company make more money, they pay out more. And when they pay out more, the share price usually will go up. Okay. It will fluctuate over time, right? But it will go up over the long term, right? And this is where when you first buy, it's cheap, and over time, as they grow their earnings and they grow their dividends, the share price will also go up. And this is where you're going to get your capital gain. Okay, so these are the two main engines that you need to know to actually compound your wealth in the stock market, especially if you are building a dividend portfolio. Okay, so let me give you an example. I think in the case of Singapore, maybe some of you, if you're Malaysian, I'm sure that you guys also drive, right? Okay, so for Singaporean, or even if you are residing not in Singapore or Malaysia, I mean, you probably will drive. Okay, so, and the things about driving car in Singapore is that it is expensive. Okay, but you can choose not to drive. Okay, but once you drive, okay, you need to maintain your car. Okay, so when you need to maintain the car, usually you need to either send for repair, or sometimes in Singapore it is required by law. You need to inspect your car once a year or once every 2 years if it's a new car. Okay, so. And where do you send for inspection in Singapore? Okay, we usually send it to here. Okay, Vicom. All right, so this is one of the vehicle inspection company in Singapore, and where you can actually, a lot of people who drive in Singapore, they will send their car for inspection. Okay, and this is how often you need to inspect your vehicle. Okay, if it's new car, less than 3 years old, you don't need to. Okay, if you drive car here, right? But 3 to 5 years, you need to do it once every 2 years. And if it's the more than 10 years car, you need to do it once a year. If you are taxi, of course, every 6 months, you need to send for inspection. So this is where, this is how the business that are considered resilient or recurring in nature. Okay, because every year there will be a lot of cars going to the inspection center for inspection. Okay, and these are the only list of available inspection center in Singapore. Okay, so if you look at the list, you can go any one of them. Okay, and you actually notice that there's this company called Vicom. I think it seems like it appears more times than the rest of the two, JIC and SDA. And actually, if you look closely, all right, all these centers are actually owned by Vicom. Okay, so except SDA, all right. So these only two inspection centers does not belong to Vicom. All right. So if you have actually noticed this early when you bought your car and you send your car for inspection, you can actually invest in this business. Okay, because this is an asset-light business and they are a cash cow business. Okay, so there's no heavy equipment needed. All right, they don't need to invest a lot of money in there. All you need to do is drive in. There's one fella there, check. Okay, everything passed. You pay your money and then you go. Right, and you do it once a year. Right, for those commercial vehicle. And this business is so lucrative. If you go and study their financial, it's actually very profitable. Right, and it's required by law. Okay, so and this company so far has been consistently paying out dividends. Okay, it's one of the best dividend stocks out there. They are actually listed in Singapore. So if you look at the dividends that were actually being paid out since 2008, 2009, even there's a financial crisis, you can see that Vicom pay dividends. Okay, so those people who invest in Vicom for dividends, they will be happy. Okay, so 2.3 cents, 3 cents, 3.2 cents, and then over the years, sometimes they also pay out special dividend. And of course, 2017 to 2019, they actually pay out exceptionally high payout ratio, which I will share with you what is payout ratio later on. But basically, they pay out more than what they earn. Okay, and after that, it normalized. Okay, so if you actually normalize it, this company actually been paying consistent and growing dividends year after year. Okay, there will be some volatility like 2020. It was affected by pandemic, but they still pay dividends. okay, because the time pandemic happened, there was a lockdown. A lot of people are not driving cars, so they are not sending for inspection, okay, and yeah, so no one is allowed to go out anyway, okay. So these are the dividends that you have received over the years, okay. Of course, 2 cents, 3 cents, so little, right? Of course, you need to multiply it by the number of shares to get the amount, okay. So let's assume you bought at 45 cents, right? At a time before the financial crisis, okay, that was in 2008, right? And let's say if you had $10,000, either ringgit or Hong Kong, Singapore dollars, okay, you just invest in it, and basically at 45 cents, right? And now basically you will have about 5,500 shares, okay, based on that number of shares that you own, right? And let me calculate how much you will be getting from dividends alone, okay. So this is how much dividends that you're going to get, okay, if you continue to hold it until today, okay. So 10,000 every 10,000. So if you have $100,000, of course you can add on 1 zero behind, okay. So if you have $10,000, this 2008 you receive $500, 600 plus, 800 plus, 900 plus, 1,000, 1,002, 1,004, 2,000. Wow, okay. And COVID came, of course, were affected, dropped a little bit, and then now resume again, okay. So this is how much dividend they receive, okay, just by owning Bicom and doing nothing, okay. So this is just a dividend, okay. And how much capital gain that you make over the years, based on $10,000, your $10,000 will have grown to $40 over $1,000, okay. So this is, and you still own the share, okay. So you're still entitled for the dividends in the next 5 years or 10 years, okay. So let me add up together how much that you're going to earn from dividends that all in all, in total, over the 13 years or 15 years of owning this company. All right, this is the amount that you have received from dividends alone. Okay, remember you put in your capital how much? $10,000, right? So that $10,000 now you actually receive dividends more than $10,000 over the course of holding the stock. Okay, and you do nothing. All right, and of course your capital gain now you still own the share. All right, 5,000 over share. And that amount actually worth $40 over $1,000. Okay, and if you add up together, okay, that $10,000 becomes $60,000. Okay, so this is just to show you, even if you start small with just $10,000, you can actually start to grow. Okay, of course, $60,000 is still not 6-figure yet. Okay, let me show you. Okay, so for this strategy to work, right? Okay, you need to take notes of a few things. Okay, first, okay, you need to give the stock enough time to grow. Okay, nowadays people are very impatient. Okay, I put $10,000, I expect it to grow to $30,000 next year. Okay, no such thing. I mean, if you want, you can go crypto market. There are a lot of scam out there. You might lose everything. Okay, and of course there are other strategy trading. Okay, you can do it, but not trading. I can tell you that it's not easy. Personally, I tried myself. Okay, and I think it's not easy. All right, and what I think is a lot easier is, of course, long-term investing. Okay, so that's why I'm sharing with you, because long-term investing, the odds are very high that you will make money. Okay, so time is something that you need to give it to yourself. So the first thing is that if you are impatient, okay, this strategy is not for you. Okay, dividend investing is not for you. I'm sorry. Okay, it doesn't give you $60,000 over next year. Okay, it won't happen. Right. So now, in fact, when you first bought it at 180 at that time, this is not adjusted for the split, okay, because over time they split. So if you bought at 180 at that point in time, before the crash, okay, first thing you're going to experience is the market crash. Your value of $10,000 dropped to $7,000. You lost $3,000 over the next few months. Some people panic. Okay, they're scared. Okay, so now if you invest in stock for dividend, usually you don't focus on share price. Okay, you only focus on the dividend. If you're going to receive the dividend next year, the same amount or higher, you don't need to panic. Okay, because you invest that stock 6%, you expect to get 6%. Okay, and this is a recurring business, right? So some people will panic because of that, okay? And you just hold it. Don't care whether share price drop or not, okay? You just keep on receiving a dividend, count every year. Oh, growing. Some year you drop a little bit, some year you grow, okay? And you just do it, enjoy it, okay? But it need time for the dividends to come in, okay? And the second thing you need to have is, of course, you must have money, okay? If you don't have the $10,000, obviously, you won't get that passive income, okay? And if you have problems saving money, or you don't even have money, I think you better get your personal finance in order first, okay? Because if you don't have money to invest, I can't help you, okay? You need to sort it out. You need to spend less. earn more side hustle, side income. All right, and obviously, don't go for travel. Okay, save the money and start to invest. Okay, because when you invest, that's how you build a cash cow machine to actually fund your future expenses. Okay, you got to delay the instant gratification. Okay, so and the next thing that I want to share with you, how do you grow that $60,000 to $100,000, right? Okay, the secret here is very simple. Reinvest the money. Okay, don't even touch the passive income that you receive, the dividend that you receive. Okay, just take the money, all right, and then reinvest it. Okay, so basically, when you have golden goose, right? Basically, these are your dividend stock. You let the golden goose lay golden eggs, and instead of eating the eggs, you use the eggs and then you hatch it into the next golden goose. Right? Don't eat it. Okay, just delay it. Okay, so reinvest it, and then you have more golden goose. You lay more golden eggs, and then of course, obviously, you will multiply over time. Okay, so this is why I think reinvesting is a very powerful strategy. If you have the time, if you don't need the cash, reinvest it because it will help you to multiply your portfolio a lot faster. Okay, so now come back based on the example that we have earlier on, right? So if I were to use Viacom as an example again, now this is $10,000 without reinvesting over the course of 15 years, right? Now, if you were to reinvest it, okay, this is how much you will probably have grown. Okay, if you reinvest it the money every year, and I calculate for you, this is how much additional money you're gonna get: additional $7,000 from your dividends, and additional close to $27,000 from your capital gain alone. Okay, all in all, of course, you will have additional 30 over thousand, and that brings you very close to $95,000, right? So actually, if I were to count 2023, the dividends, that will actually push it up to $100,000. Okay, so that actually officially makes you a six-figure passive income. Okay, but this is only until 2022. Okay, so I didn't calculate that, right? So I mean, but I think you get a point, right? So reinvesting is a very powerful concept in dividend investing. So a lot of times when you first reinvest the money, you may not see the actual impact, but over the course of 10 years, 15 years, 20 years, you start to see the amount to snowball even faster. Okay, I think the best example that I have is my friend AK. So I think some of you probably have watched the interview with AK. Okay, he always masks himself, so you don't know how he looks like because he just want his privacy. Okay, so when I first met AK more than 10 years ago, I still remember his passive income was like $120,000, which was very impressive at that time. Okay, even now it's like impressive, right? Because he has retired, I think 5 years ago, and he has no more passive active income. Okay, but his passive income still coming in every year, every month. Okay, to actually pay off his money expenses because he's no longer working. And then surprisingly, recently when we did the roundtable interview with him, and he actually told us that this is the interview that we did. Okay, you can go and watch. Right, it's on our YouTube channel, and he basically said that his passive income now has grown to $200,000 without any capital injection. So how did he do it? He said very simple. I reinvest my dividend. Not only that, I reinvest back the capital gain that I received. So and he just grow his passive income from $120,000 to $200,000 every year. Okay, so actually he's been growing consistently, and that's his secret is very simple. I reinvest. I don't spend everything that I have, even though I'm retired. I don't consume everything that I have received from my passive income. I reinvest. That's how he grew his money. Okay, so let me recap the first secret. Okay, so how you actually grow your 5 to 6 figure passive income, right? A dividend portfolio. First, you need to be very patient when you invest in dividend stock. Okay, and don't panic. Okay, every time when there's a share price correction or share price drop 50%, you don't panic. Okay, you have to ignore short-term volatility. Okay, so that's the mindset that you need to have if you are a dividend investor. And second, of course, you need to have money. Otherwise, you can't invest in dividend stock. And third thing, if you can do it, if you want to quickly expedite your process of financial retirement, okay, you need to reinvest it. Okay, so if you are young, good. Okay, if you are 30s, 40s, 50s, I think you can do that, right? But if you are 60s, 70s, of course, I'll tell you just go and enjoy the passive income. Don't need to reinvest, okay, because your runway is shorter. Unless you can live like 100+ years old, of course you can continue to reinvest 50%, you spend 50%, you reinvest. Okay, so Yeah, so these are the three things that you need to know, okay, from the first secret, okay. So I think, yeah, so the next secret that I want to share with you is, of course, how do you find those stocks, Rusmin, okay? How do you find those stocks? I mean, you mentioned about, dividend stock, okay. So next part, I'm going to share with you, how do you find those dividend stock that is going to pay you passive income, right? Because once you have the money, you need to deploy it. Okay, so how do you find those stocks to deploy? Okay, first, right, it's all about business. Okay, so when you invest in dividend stock, okay, you need to change your mindset a little bit. You are not uh, hunting, you are not speculating the stock market anymore. Okay, you need to look out for a good businesses that you think they are resilient. Okay, basically they are highly recurring in nature, right? And when you have a recurring business, and this recurring business will actually produce a very solid cash flow, consistent cash flow for the shareholders. And when the director decided that, hey, this cash flow can be paid out as a dividend, and this is where they will pay it out to you as a investors, okay, as a dividend, right? So this is cycles that, it's just common sense, okay? But people who, when they go to the stock market invest, they don't look at stock as business. They just look at it as a ticker symbol. They just buy, oh, $1 goes up 120, I make money. Yeah, I happy, I sell. Okay, but people don't look at it that way. Okay, so you need to change your mindset a little bit. Look at every stock as a way for you to invest in the good businesses. Okay, so now, so how do I define a good businesses? Right, a good business. Basically, if it's like if you, let's say, basically those businesses that require repeat transaction with their customer. For example, if you consult a doctor when you're sick, okay, you of course, when you next time when you're sick again, you need to consult your doctor. So doctor, that's why they earn so much money, because their business by nature is recurring. Every day there will be people sick and visit the doctor. Okay, and if you drink a can of Coke, okay, for example, not healthy lah, but if you drink a can of Coke, but if you like, you're addicted to it, just like Warren Buffett, right? You need to buy again the next time you want to drink it. Okay, so that's a recurring business for Coca-Cola. Okay, so there's a repeat transaction, and that's why it's a recurring business for Coca-Cola, for a healthcare business, right? So you just need to find those businesses that can actually recurring in nature, and they can actually generate stream of consistent cash flow. Okay, so there's no shortcut to this. I can't tell you, oh, there's a shortcut where you can filter all resistance business come out, okay? Which I will share with you later towards the end, okay? But you need to go through every company one by one to find those businesses, right? So Vicom is one example that I've shared with you earlier on. But let me give you more examples on some of the recurring business. Okay, so if you go into the infrastructure business, right? So the road construction business, for example, right? Even within the road construction, when the government give out projects for company to build the road, okay, it can be consider a non-recurring business. It can be a recurring business depending on where you come from. Okay, if you are a contractor and you bid for the project to build the route, okay, you may win the project, which is good, okay? But that business, I can tell you, is not recurring at all, okay? I actually learned this the hard way, because I used to invest in this company called OKP, and they are a road construction company where they will go to a government list of project that actually out for tender, right? So they will win a lot of times, okay, but sometimes they might not win, and sometimes the projects are a lot smaller. So these type of businesses are, because it's very project dependent, every time they finish a project, they need to find the next project again. So it's very tiring, and it's very difficult to scale if you keep on finding project after project and project, because it's lumpy. If you don't have this month, next year, let's say the government don't have a lot of route to build, you don't have a project, you'll be in trouble, the company will go down. Right, so this is a non-recurring business. But on the other hand, if you own a company that own the route itself, you are a toll owner, right? So there are a lot of expressway companies that you can invest. If they are listed in Malaysia, in Hong Kong, Singapore, unfortunately, there's no toll that you can invest. It's mostly owned by government. Okay, that business is recurring. Okay, every time you bypass you use a route or expressway, okay, you need to pay that money. Okay, so that's actually a recurring business for that company. So if you're an investor of that business itself, you can actually make very good money from their passive income from the dividends that they pay out every year. Okay, so a non-recurring business can be very lumpy. So the revenue, it looks like that, up and down, up and down. In some years, worst case in the scenario during the crisis, you see even a bigger drop, a sharper drop. Okay, because they have to keep on finding new customers. Okay, so it's very tiring. On the other hand, if you find a business that are recurring in nature, okay, so the blue one are recurring in nature, okay, basically are your existing business, and the yellow one are the one that you just have to keep on finding new business. So when you have a recurring business, this customer keep on coming back, right? And then of course along the years you can gain more new customer, and when a new customer become your old customer next year, and that will keep on piling up. Okay, so this business become a lot stickier, a lot more recurring. Okay, and this is how a recurring business look like. So if you look at the track record of 5 years, 10 years revenue, typically they are a lot more recurring in nature. Okay, so they have a stacking effect, and we love this type of businesses as a dividend investors itself. Okay, so I think Vivian asked a good question. Would there be any impact on Vicom for EV ownership? Okay, so yes, there will be a disruption in the industry. We actually used to own Vicom, but we have sold it off. Okay, but it's a good example. Good question that you brought up, Vivian. Okay, so there's a threat over there, but actually Vicom is not just in the car vehicle inspection business. They also have a non-vehicle inspection business, which contribute more than 50% of the business itself. Okay, so the business is not entirely not under threat. Okay, and the thing about EV is that they require less parts, less thing to inspect as well. Okay, so there might be some compromise there over the midterm and long term. Then that's why we actually exited the company also, right? So yeah, and then I think a lot of you have heard that there's a lot of property crisis in China. Wow, China crashing, so scary. Everybody is like losing money there. Yeah, it is, okay. And there's a housing problem in China, property crisis. You heard about China Evergrande, Country Garden, and yeah. Actually, if you go and study those business model of those property developers that are in trouble, okay, their business, okay, are not recurring in nature at all, okay, because a lot of time when they go and buy land, they build the land, they build up the building, they usually will sell to investors or homeowners, and these are all one-off items. Okay, and the next year they have to bid the new land, they build up again, they sell the house to the new homeowners, and that is actually a very project basis. Okay, so it's not recurring at all. And if you look at it's basically a property development is a cyclical business. Okay, if you go to these companies that they are listed in Hong Kong or China, they are in trouble right now because of the slowdown. It actually affected them. If you look at the percentage of income that they derive from property development, which is not recurring at all, it's a bulk of their revenue and profit actually come from 70-80%. And the worst is that in 2017, 2018, almost 100% of their income comes from property development. Okay, and that becomes a problem if you have crisis and then you have investors who don't want to buy houses anymore, and they don't have cash flow coming in, and that's why now they are all in trouble. They are all into liquidity issue, bankruptcy, and all that stuff. Okay, so that's why you need to pay a lot of attention on the business model itself. Okay, so even within the housing industry, there are different type of business models. There are the different type of different companies listed within the industry itself. Okay, so you have a property developer, right? So and this is where your Country Garden, your China Evergrande, their model is actually just a pure property developer. They don't keep investment property. That's the problem. Okay, when you have investment properties, okay, like this is a lot more recurring in nature, because when you own a shopping mall, you can actually rent it out. And every year there will be people who want to rent a space in shopping mall because they want to target shoppers in the shopping mall itself. Okay, and they have to pay rental. And then when you pay rental, it's actually recurring in nature. That's why you have a lot of property investors in Singapore, because they love property. We all love property. I love property. Okay, because not only is recurring in nature, secondly, you also get to see capital gain. Okay, so that's the beauty of having properties in Singapore, even sometime in Malaysia, right? So because the business itself is recurring in nature, and you can actually invest in companies that are listed that own a lot of investment properties. Okay, I will share with you later, but this is just to share with you. Different business model have different cyclical element in it. Okay, so you want to invest in those businesses that are a lot more resilient in nature. Okay, Vicom is one example that I've shown you earlier on. Every year there will be people keep on coming back for inspection, and that forms a bulk of their recurring business. Okay, so and once you find a company with a recurring business model, of course, you also must check other things, right? You have to check their payout ratio, which I'll share with you, okay? But a lot of these dividend stocks, you can actually find them in Asia, okay? Thankfully, I think about of you, I believe here is actually Singaporean and also Malaysian, right? You can actually find dividend stock in Singapore, okay, in Malaysia, and also Hong Kong. Okay, so these are three markets that are actually very close to us, and there are plenty of dividend stock that you can actually invest and find and invest, right? And the yield, especially in Hong Kong, are actually very attractive. I can find easily companies that gives me 9% yield, and they will continue to pay that for the next 5 years and 10 years. Okay, and we invest in some of those companies. Okay, so because Hong Kong is going through a recession, I would say depression. Okay, recession is just like 1 year, 2 year. Depression is like 4 years. Okay, so Hong Kong market has been down for almost 4 years by now. Okay, so there are a lot of opportunities for you to invest in dividend stock. Okay, in Singapore, of course, there are quite a good one also. I'll share with you more later. I'll give you more example. Okay, so once you find those, these are the market that you can invest for dividend stock. And once you come across the companies that are resilient in nature, of course, you need to check whether they pay dividends or not. Some businesses can be recurring in nature, but if they don't pay dividends, those are not dividend stock. Okay, so for example, Alphabet. Right, Alphabet is own Google. I mean, I love it. I do invest in Alphabet, and they don't pay dividends, so those are not dividend stock. Okay, so I buy it for capital gain only. That's all. So it's a different strategy altogether. Okay, so you want to make sure companies pay dividend, right? And second thing you need to check is, of course, the company must pay consistent and growing dividends. Okay, so usually for the last 3 years, 5 years, usually check at least 5 years to 10 years. Okay, to check whether they have been paying dividends or not. The trend. Okay, and of course, when they pay out dividends, sometimes some companies may pay out more than what they earn. Right, you want to make sure that step 3, you have a sustainable payout ratio, meaning to say that if the company make $1, okay, you want to make sure that they don't pay out more than $1. Okay, Viacom had that issue in the 2018 to 2020. Okay, so they actually pay out more than what they earn. But they realize nothing wrong with that. They just realize that they don't need so much capital, so they just pay out because it's a very asset-light business model and it's recurring in nature. The management realize that they don't need so much money in the bank account. Okay, so which is fine. Okay, it's just that you need to be aware that more than 100% payout is not sustainable. So when you do your calculation, of course, you have to base on the sustainable dividends. Okay. So now these are the 3 main things that you need to check. Okay, I don't have time to go through with you how to do it one by one, but you can, you need to understand this thing. Okay, so far I hope all this makes sense to you. Okay, yeah, and yeah. So just a quick recap again. Secret number 2, basically you need to look out for companies that have a recurring business model. Okay, that's very, very important. And then of course you need to make sure that the companies have a sustainable payout ratio. And you can find these companies in Singapore, Malaysia, even Hong Kong. Okay, and of course Australia. This strategy can be applied anywhere. If you are watching this from US, of course you can also use the same strategy to invest in dividend stock. Okay, so of course we have many students in the past, and one of them is Jason, and he actually published his result every year. 2019, but that was the last time he posted. After that, maybe he's not active anymore. And then he actually shared his dividends that he received since 2015 when he joined us for this dividend investing strategy. And he actually been getting about 10.6% a year. Okay, I'm very happy for him, right? And after that, he posted another post, which I don't show you here. He said his dividend portfolio is far better than his money that he put with some hedge fund companies. Right, and then he realized he actually sacked them after that. Okay, so he could actually do it himself, and it's a lot easier. Okay, it isn't difficult to learn this. Okay, and of course I'm not done. I have the third secret to share with you. Okay, so basically, how do you find companies that can give you high yield? Okay, I actually share with you a few times already. Like now, Hong Kong market, you can go there and invest. Of course, you have to limit exposure. You cannot be 100% there. If you live there, of course, you can do 100%. But if you don't live there, I don't recommend you to do 100% in Hong Kong, right? So, but there are ways you can actually get invest in stock that gives you very high yield, and yet they are sustainable. Okay, so Hong Kong is one of them that I shared with you already. Secondly, of course, within this industry like real estate, which I shared with you, there is one industry that actually very lucrative to invest for dividend, right? And that's actually the companies or the trust that own investment properties. Okay, these are what we call as REIT, real estate investment trust. That's why you hear REITs a lot. People talk about REITs. What is it? Okay, actually it's very simple. It's just a trust that owns commercial property like your shopping mall, your hospitals, your hotels, your offices, right? Data centers. Right? There are a lot of different type of REITs out there. Okay, but REITs as an instrument is really good for dividends. Okay, so if you invest in property developer like Capital Land or even Fraser Property, your yield will not be as high. Okay, your yield typically ranges between 3% to 5%. Like even for Capital Land now, is the yield is actually 3% or less. Okay, but if you invest in REITs, actually you can get a yield of at least 4% easily to 8%. Okay, so this is why REITs is a lot more attractive if you are looking to invest for dividends. Okay, so and the reason is very simple, right? REITs, they have the mandate to pay out everything, 100% of their distributable income. Okay, because if they do it, if they pay out 90% of their distributable income, they will be able to enjoy the tax benefit. All right. So if for normal people, when you invest in physical property in Singapore, if you rent it out, you need to pay tax, right? For REITs, they also have to pay tax. It's just that now there's a rule exception here. If you pay out more than 90% of your distributable income, you don't have to pay tax. Now, because of that reason, and the high payout ratio, a lot of reinvestors get to enjoy a high yield, relatively high yield, and they are actually very sustainable. Okay, so yeah, so this is the reason why REITs are very popular in Singapore and to a certain extent in Malaysia as well. Okay, so currently, of course, there are about 39, 40 REITs that are listed in Singapore. And of course, there are currently about 18 REITs that are listed over there. And in Hong Kong, there are a lot less because Hong Kong REITs doesn't have the tax benefit like the one that we do in Singapore and Malaysia. Okay, so there's a tax advantage in these two markets, but not in Hong Kong. Okay, they still have to pay for the 16.5% tax. Okay, that's why you don't see there's a lot of incentive for a lot of property developers or even like companies like Chong Kong where they own a lot of investment property to list their asset as a REIT. Okay, so yeah, so that's the reason. Okay, there are only very few REITs listed over there. Okay, and yeah. So now within the REITs itself, obviously you need to understand there are different sectors. You have healthcare REITs, you have retail, you have office, you have industrial, you have hospitality. And the key thing to take note here is that not all REITs are the same. Not all REITs are resilient. Okay, they can be very, very different, right? So you can't just blindly go to office and then expect that, oh, Rusmin said REITs is good to invest for dividend, right? And then you go in and realize that, hey, office is actually a bit cyclical, especially hospitality. Okay, so you need to understand each REIT has its own characteristics. I probably need an hour to share with you each characteristics of this. What are the characteristics of each of these subsector? Okay, but just to summarize it, these are some of the REITs that you need to take note. Okay, so healthcare REITs, that's how I classify it. Basically, they own mostly hospital and nursing homes. So there are only two in Singapore, First REITs and Parkway Life REITs, and then you have RRCA REIT, which is listed in Malaysia itself. And of course, retail REITs, of course, there are some retail have a component of office also. And yeah, so this is where you get to see the full list over here. Okay, I don't list the business trust here. Okay, like your First Ship Leasing Trust or Ascender India Trust. Okay, those are business trusts, which is different from REITs. REITs are a lot more regulated and they are more restrictive in what they can, in terms of what they can do with your money. Okay, so that's why they are a lot safer as compared to business trusts. Okay. And yeah, and then you have office REITs, and you have, of course, Singapore, European asset, US asset, which are a lot in trouble right now. Okay, so you must understand and know how to identify some of these REITs that you can actually invest. Okay, of course, you have industrial, which also that include the data centers, which are classified under here like Digital Core REITs, Keppel DC, and Mapletree Industrial, right? And of course, in the Malaysia, there's only like three. Right, and the most recent one that got listed is actually AME REITs itself. Okay, and of course you have hospitality REITs. Right, so the point I want to share with you here is that when you invest in REITs, okay, they can gives you very stable dividend, but not all of them are equal. So you need to understand each of these sector, the characteristics, the risks, the opportunities, and how do you take advantage of it. Okay, but for now, I just want to quickly zoom into an example where how you can actually make money using that $10,000. How do you grow your money in the REITs itself? Okay, so I'll give you an example of this REIT called linked REITs. Okay, this is probably one of the best REITs that's actually listed in Hong Kong. Okay, so they own a lot of commercial properties in Hong Kong. Okay, primarily in Hong Kong. They have exposure in China, and also now recently they just entered into Singapore market. So basically, this REIT, you don't need to know too much, right? I just show you what they own, right? So these are the shopping malls that they own across Hong Kong Island. And most of them are suburban malls. Okay, so even though for the last 4 years there was very little tourist arrival because of the riot, because of the lockdown, 3 years lockdown in China and Hong Kong. Okay, these malls were still doing well and they were still paying out dividends. I'll show you later. Okay, and these are suburban malls, and the bulk of the traffic actually come from Hong Kong, local people there. Okay, so it's very resilient. Okay, and of course they also own car park space. Have you all heard of car park space, $1 million car park space in Hong Kong? This is one of the REITs that own the most car park space in Hong Kong. I think they own so many of them. I never really count, but I think in thousands, tens of thousands of car park space there. Okay, so if you invest in this REIT since IPO, okay, yeah, so if you own this REITs, okay, this is the dividends that they pay out over the years. Every year increasing. Even riot doesn't matter, COVID doesn't matter. And recently you see it drop. Wow, what happened? Okay, because they issue the rights. Okay, because of the higher interest rate, they decided to issue rights. And if you subscribe to the rights, there is no drop in DPU. Okay, so there is no drop in DPU actually. Okay, because you are technically owning more shares, right? So this REIT is actually very resilient in nature, okay, but they also over time gone through a lot of volatility. Wow, go up, go up, go up, go up, down. So investing in stock can be scary for some people, especially if they are very short-term minded. They look at the price, go up like yo-yo, come down, crash like a yo-yo also, right? It's so crazy. Just like our COE, the car go up 20%, crash 30%, so drama. Yeah, so stock something like that, right? But if you are a dividend investor, you have to tell yourself that you invest for a dividend. You should not be, be panicked when the share price drop. Okay, so let's imagine you put $10,000 since IPO, and then you hold through the cycle. Even now, it already crashed 60%. Now it was as high as 100 Hong Kong dollars. It crashed to about $40 Hong Kong dollars now. Okay, you hold it until today. This is how much it's worth. Okay, right. So I'll show you. Yeah, 35,000 now is worth $35,000. If you during the peak, this amount easily worth $80,000, $90,000. Okay, but let's assume you never sell. You hold it until today. This is how much you're gonna get. Okay, so dividend alone, I calculated for you in summary. This is how much you're gonna get for based on $10,000 that you invest. You will receive $27,000, and on top of that, you will receive $34,000. Okay, so and the yield is in Hong Kong dollars. Yeah, Vivian asked, right? Which may not translate to the lot earning in Singapore dollars. Actually, if you look at Hong Kong dollars, it's actually pegged to US dollars. And US dollars over the 10 years, 15 years, of course, it has, as volatility is there, it depreciate a little bit, but it's not like kind of depreciation that you see with rupiah or even like rupee. Okay, so I personally don't recommend you guys to go and invest in India, emerging market, like even Malaysia. For Singaporean who invest in Malaysia, I don't recommend because of the currency risk. Okay, but Sing dollar, Hong Kong dollars, and Chinese yuan, I think is quite stable because those are the big nation. They have the financial power to stabilize the financial system, just like Singapore. Singapore's Sing dollar is also controlled by government to a certain extent, right? So they can actually play the strengthening, weakening, and stuff like that because they have the reserve in foreign currency. Okay, so yeah, there's a currency risk for sure. Okay, but I think in major developed country, you have to take on currency risk. Otherwise, you have to stick to your local market, which is Singapore dollars. Then you won't have these opportunities. Okay, give and take. Right. So all in all, your $10,000 is $61,000, and at its peak, this would be worth $120,000 because this fella crashed. Okay, because Hong Kong is going through a 4 years of bear market. This is the fourth year that we are counting. It's very scary, okay, but it's also one of the best market to invest for dividends. So now I'm actually excited to invest in dividend stock in Malaysia. No, in Hong Kong. Okay, I'm not scared. I'm excited. Okay, people are running away, right? But we see it as an opportunity for you to invest in those dividend stock that gives you 8%, 9% consistent and growing. Okay, so it's crazy, right? But people don't like it because there are a lot of macro fears, people scared. We look at the fundamentals, right? We look at businesses and we identify good businesses, right? So now let me recap. Right, I mean, there are some of you also yeah, there are some of you ask about data centers. I can tell you that I will need another 1 hour to tell you about data center because it's a subsector altogether. Okay, but let me summarize what we have covered so far. Okay, I hope you guys have been learning. Okay, so we have I've shared with you how you can actually use dividend investing strategy to grow your retirement portfolio. It's one of the best strategy out there actually. Okay, in fact, when I retire next time, this is be my retirement plan also. I just invest in it. Of course, excluding property. If you invest in property in Singapore, fine. Okay, that will be one of the way you can do it also. And of course, and I also show you how it can actually grow to 5-figure easily. Okay, and then of course 6-figure if you hold it really long term. Okay, so I give you already a couple example Viacom link REITs, and of course there are two vehicles to create a sustainable dividend portfolio. There are two pillars that you need to take note, right? The dividend growth and the capital gain that actually form a part of it. And of course, I also share with you how to identify dividend stocks. Okay, you need to know how to calculate the payout ratio, and of course, how to identify the good business to invest. Okay, and of course, I have a lot more to share. Okay, and yeah, so um, okay, I have something to share with you, which of course I have to do a bit of sales. Okay, I hope you guys are okay. Okay, but basically, there are a lot more things that I can cover, but I don't have the time to cover it here. But what I have in store for you guys here, okay, especially for you guys are listening to this live webinar, is that I'm going to open up the dividend course that we have. Okay, so this is our flagship course, and it's very popular among our members. Okay, and people who know us actually they have probably have gone through this dividend machine. Okay, but you can't join right now. Okay, in fact, the last few months you can't join. Okay, because it's closed, and our intake is only like once a year officially. Okay, so and even if you want to join, before this session, you can't join because it's closed. You have to wait for the next reopening. Okay, which is probably be after Chinese New Year, right? But for now, I'm going to do a special arrangement with Alex, okay, market-wise, okay, basically to give you guys the opportunity to join this dividend machine, okay? But listen to me first, okay? What this dividend machine is all about first, okay? So this is our flagship course. Basically, we're going to, when you join this course, you're going to learn how to identify different companies with many more business models that you have heard today. Today is just scratching the surface on how we should actually pick to invest for dividend. And of course, what are the trends to look out for if you want to invest in dividend stock for long term? And of course, how do you identify those dividend stock that are financially strong? You don't want those dividend stock that pay you dividend, and the next moment crisis come, they're gone because they're already leveraged. Okay, so I'll teach you how to identify those companies that are already leveraged. And of course, some stock that have a lot of red flags and they may not pay, they gives you like 10% yield, but the next moment they cut the dividend. Okay, so I'll teach you how to avoid those dividend stock and when is the best time to invest for the maximum capital gain and maximum yield. Okay, so you learn all of this in dividend machine itself. Okay, and of course, some special situation that you need to sell because some dividend stock you cannot hold forever. You need to sell along the way. Because maybe the fundamental have changed. All right. So I'll share with you the full reasoning, good reason before you actually sell your stocks itself. Okay. So this course will let you learn all of those stuff. Okay. These are under dividend machine itself. So once you learn it, you'll be able to learn and find dividend stock on your own. Okay. So we will give you very simple 8 steps to do that. And on top of that, okay, you're going to learn how to analyze REITs by yourself. Okay, so I talked briefly about REITs just now, but in this dividend machine, I spent I don't know how many hours talking about REITs. I think at least 6-7 hours talking about REITs, right? Just solely on Singapore REITs and Malaysia REITs, okay? And you're going to learn, okay, so what are you going to learn in REITs itself, okay? So you're going to learn some of the financial metrics the REITs must pass before you invest in them, and how do you value them, and when is the best time to buy and sell, okay? And of course, there are 5 categories of REITs I mentioned just now: healthcare REITs, office REITs, data center REITs. They are all different, okay? You need to understand them before you invest, okay? And of course, there are risks. Each category has its own risk. You need to understand, of course, they have own growth driver. And you also need to look out for a good managers who are managing the REITs. Okay, you want to avoid those managers who are not aligned with you, like Savannah REITs that can be very problematic if you invest in them. Okay, so this is The second thing is that you're going to learn how to analyze REITs, and basically you're going to learn how to pick the best REITs to invest in your portfolio. Okay. And the third thing that you're going to learn, which is everybody's favorite, is the bank, Singapore Bank, right? So basically in the bank itself, Victor, not me, okay, going to share with you what is the history of Singapore Bank. So you're going to walk you the tour, a very long session, okay, but you're going to learn why Singapore banks are very strong in summary, okay, and what are the financial metrics, the ratio that you need to look out for, and when is the best time to buy. And we also do the live valuation for you and tell you at the spot whether the bank is undervalued or overvalued, okay? So you learn all of this stuff in the bank module itself, okay? So yeah, so this is the three main things that you're going to get when you join the Dividend Machine. And of course, over the years, we have our members who join us. I think one of them is Matthew, and he actually wrote an email to me. And he actually very appreciative, and he actually want to buy us a lunch. And because he actually benefited a lot, and he invited his friends a lot. He actually asked a lot of his friends to come and attend. At that time, we still do physical, so his friend all came, and he also sent his son to come over and attend. Because it's something that I think will be very useful for him in the future as well, okay? So you better start early, okay? So basically, these are three things that you're going to get. And on top of that, I know that, every time when you go through a course, you definitely need support. So we will throw in the support there. In fact, we have been supporting a lot of our members who joined us since day one, since 2015 until today. Some of them are still asking us questions, but they are making sure that they actually, every dollar they pay in Dividend Machines are well worth their money, and they are asking a lot of questions. Okay, so we are also answering the question. And the thing about us is that if you go out there, all the questions are answered. Okay, none of them are not answered. Okay, why? You know why? Because I'm the one that answering it. And of course, sometimes Victor and some of the team members who answer those questions. So our support, I can tell you that is very, very strong. And this is something that I'm very proud of, okay? And that's why Fifth Person is well known of also, because we don't just leave you there or give you throw you one course and then you're on your own. No, we hold your hand through the entire journey, even until today. Okay, so a lot of members are still being supported. Okay, so this is worth at least $2,000. I think it's worth a lot more. Okay, because it takes a lot of my time actually. Okay, but I enjoy doing that because a lot of questions are asked. Sometimes people get lost or they have question that I also can learn. Okay, so I'm personally answering a lot of this question also. And of course, these contents are not static. In fact, it's ongoing, right? I mean, we have actually keep on adding more contents, more modules. When you first launch it, it's just Dividend Machine, the 8 step, and then the REITs, and then along the way we add on banks, we add on Malaysian market, and then we keep on revising it. We improve the content, we add on new example, and then new case study. Yeah. So over the years, I think we have been revising it. It's just like your Microsoft Windows 9, Windows 10, Windows 12, right? But all this same thing, we do continue to update them, and you get all of them for free. Okay, you don't need to pay to upgrade and stuff like that. Okay, so this is once you join, it's a one-time fee, and basically you get all these lifetime updates for free. Okay, so this is the things that you're gonna get. So it's going to be very valuable, and we're going to add on more contents, I can tell you. Okay, because we have the list plan on our pipeline, we will continue to add. So it's really worth it. And of course, you're going to get, I think what people actually appreciate a lot also is the live webinar. Okay, so this session is definitely not enough. Okay, I mean, just going through all the online lessons, the content, the support is not enough. Some people still want to meet us face to face. Okay, so we do a lot of live webinar session with them, and then they get to go through the entire journey on how to build dividend portfolio, and we will teach them how to do it. Holding into their hand, and then we ask them live question. Okay, so they can attend this webinar. Okay, and this webinar we basically share with you the most important things about building dividend portfolio. Okay, we cut the chase, we go straight to the point. We teach you how to do it. Okay, and of course you're going to see us how to analyze stock, pick the dividend stocks. Okay, and yeah, how do you identify the best dividend stocks, and you get to interact with us. And yeah, so all this, it comes with the Dividend Machine course itself. Okay, so this is all access webinar. Not only you can attend once, but you can attend unlimited. Okay, so later I'll show you one member that I still see him every year. He really attend, because some people may not be able to. Personally, when I attend a class, I cannot absorb everything. I need to re-attend to strengthen my learning. I attend one time, I learn 30%. I attend second time, I learn 50%. I attend fourth time, I learn 80%. Wow, good, right? So you have this unlimited attendance. Okay, And on top of that, okay, I'm going to give you guys a very special bonus. Okay. And this special bonus we have so far never give out before. Okay. Starting last year actually. Okay. And this special bonus, okay, it's going to be very valuable for a lot of you guys. Okay. Because last time member when they join, they don't have this. Now this bonus, basically I'm going to show you what I'm going to throw in here. Okay. You're going to have a dividend list in Singapore. Okay, basically we have filtered out for you a list of potential dividend stock that you can look at. You can start off with this list. Okay, in the past, our students have to go and go to the SGX, go through 1,000 over companies to dig those companies one by one. Nowadays, no need. I tell you that I do it for you. I do it all the 3 steps that you guys have learned today. And now you'll be able to access this list once you join this dividend machine. Okay, so in this list, basically we highlighted all the dividend stock that have been paying consistent dividend for the past 5 to 6 years. And we do the numbers crunching for you. This watch list take me a long time to compile, days, right? So this full list, you're going to get it, once you join Dividend Machine, right? Not only in Singapore, but you're also going to get it in Malaysia. Okay, so if you are looking for Malaysia dividend stock, you can actually get the whole list here. Okay, so all this is going to come with it. All right, so yeah, so this is a special bonus that I have for you guys, right? And yeah, so all this come with the Dividend Machines package itself. Okay, so if I add up all the value that you're gonna get, it's definitely gonna worth at least $7,000. Okay, obviously I know that I'm not gonna charge you that $7,000, right? So, but even if I did, what if you master the art of dividend investing, and then you stop losing money? Okay, some people pay $50,000 to learn a mistake. Okay, you come in this dividend machine, I share with you my mistake. I show you not to know that mistake, how to reduce your risk in the overall portfolio. By doing that, you're actually not losing money. When you're not losing money, you're actually making a lot of money. Okay, and this is worth a lot more than $7,000. Like that's why I said it's worth a lot more, $7,000. Okay, I've heard people who lost $150,000. Okay, in one single investment. Okay, so yeah, so this is the investment that you should look at it as a cost that you're going to invest. It's going to give you a life skill that you can teach it. You can even once you master, you can teach your kids. Right, you can grow your CPF, EPF retirement fund. Okay, and then eventually once you start to build that dividend portfolio and it start to pay you passive income that is enough to cover expenses, this is where you'll be financially free. Okay, so and of course now I know a lot of seminars or webinars out there charge you $5,000, sometimes $10,000. In I think in Malaysia the courses there are usually $10,000 over dollars, but here I'm not going to charge you $7,000. I'm going to charge you $3,000, and I'm not going to charge you $2,000. I'm not going to charge you $1,000. Okay. In fact, you can get all of this, okay, for only $688. Okay. So it's a good deal, huh? Okay, you better grab it while it lasts, okay, because after this, I think you can only join this opportunity through MarketWise. Alex, I think I will show you how you can actually join later, okay? But you can go and read the review, right? First, if you need more time to decide, and go to Seedly. There are a lot of students who have give us review. Some of the review dated, I think, 2019. Ming Jie joined us since 2015, okay? And every time I conduct, every year I see him. This fella online also I see him. Okay, so he really maximized it. Yeah, so I mean you can go and read the review. All these review are unsolicited. Okay, so they voluntarily go there and leave review themselves. Okay, so yeah, I mean you can go and read up more about it, right? So just to quick recap, what you're gonna get a dividend machine, the 8 step on how to find dividend stock. You're gonna learn how to find dividend REITs, okay, how to put them the best REIT in your portfolio, and then bang when's the best time to buy and sell. And of course, you're going to get lifetime support for us throughout your journey. And then there will be lifetime content upgrades, meaning to say that 5 years down the road, you may have different contents all together. You get all this for free. And of course, you have a live webinar that you can attend many, many times. And of course, you have the entire watch list in Singapore and Malaysia that you can start off with, kick off your dividend journey itself. Okay, so this is everything for only $688. Okay. So I'm sure by now you probably have realized that this is such a good value, right? And on top of that, okay, I have a good news for you. Okay, I'm going to give you guys a special bonus again, and this time round it's going to be an additional $100. okay, if you decide to join us, okay. So instead of $688, you can actually come in for only $588 dollars, okay. So I realized that this amount is actually a lot cheaper as compared to the course fee that I paid for my son. I recently sent in for phonics class, and over time, I think EDA is going to cost me $4,000-5,000 for that 1 hour session, and I can't re-attend. Okay, so now if you want to take, basically, if you want to take advantage of this offer, now you can go to this link, okay, or you can simply scan on this, take out your phone, and then scan this QR code. It will bring you to the website directly. You can read up more about the dividend machine, what is it all about, okay, and then once you're ready, you can just click on the sign up page from there. Okay, so this is how you can take advantage of it. Okay, so definitely ask, is this for life? Yes, definitely. Okay, this is for life. It's a one-time fee, lifetime support. Okay, those who join us since 2015 is still getting support until today. Okay, I'm not kidding. You can go and check. Or once you join, right, there's a forum Q&A. You can actually go and check all the questions dated since 2015, since we launched it. Okay, as long as we are still around, okay, we will still be around for the next 5 years and 10 years. Okay, we are financially very strong. I know how to analyze company. I know how to tell a good company. So we build a company that we want it to be also strong. Okay, so I think next 5 years, 10 years, we will still be around. Okay, beyond that, I don't know lah. Okay, things may have changed. Nowadays, things change so fast. You have AI suddenly, right? So next time, maybe AI replace us. You don't need us anymore. Then no more cost already. Okay, you will ask AI. But AIs can't do that now, of course. That's why we're still around. Okay, so just go to this link if you are ready to sign up. Does it cover US stock? You can use the same strategy for US stock. It works. Okay, so but for US stocks, I don't recommend you to buy for dividends. In fact, US companies, I do invest in the US. I personally invest for capital gain. Okay, so I have Magnificent Seven, some of you mentioned. Okay, so yes, I do own some of that. And growth stock like Magnificent Seven gives you much higher returns. So what percentage would you put on the dividend stock and what percentage in growth stock? Okay, so Raju asked a very good question. Magnificent Seven are one of those good stocks that I will classify them as for capital gain. You can allocate your, so not everyone will like structure their portfolio 100% dividends. Some people like me, I will structure 70% growth and then 30% dividend. Okay, and over the years, I have actually increased it to 35%, 40%. Right, as I grow older, my dividend portfolio will grow bigger. Okay, because my priority changed. I want more dividends. I don't want more capital gain. You know, when you have Magnificent Seven, you have to go through that volatility. You know, Meta crashed 80% and now rebounded 300%. You have to go through that kind of volatility. Not many people can go through that. Okay, so you need to understand that if you only invest in growth stock, they are a lot more volatile. The returns are higher for sure, okay, but of course you can also lose more money for sure. Okay, so you need to know capital, how to invest in growth stock as well. Okay, so it depends on our comfort. Okay, but when it comes to dividend machine, I will share with you more on how you can actually structure it ideally and reduce the risk, right? So yeah, so there's a direct link that you can join. I think the MarketWise have published in the chat. Okay, so if you don't want to type yourself, you can go there. And of course, we did a survey with our members, volunteer. Okay, so this kind, if they want to tell us, then they tell us. Okay, so far, almost 100 people give us the feedback. Okay, on how much that they are getting in terms of dividends. Okay, these are our students. Okay, they have gone through that, and 2 of them are getting $100,000. Okay. And most of them are getting about 5 figures, okay, and yeah, and then about 17% are getting or 17, about 50% of them are getting 4 figures, right, 1,000 to 9,000, and then 30% are getting about 50,000, 80,000, 30,000 there about, okay, and some of them are getting more than 100%. Okay, some of them just started. Okay, so this is real result, okay, and survey, and not to worry, okay, if you're not sure whether this is for you, okay. Now, we have this program for you also, money back guarantee, okay? After you join, then you realize that, hey, the content sucks. Rusmin talk nonsense. You don't know what he's talking about, right? So far, people go through the course, they all benefited a lot, okay? But maybe you are at a different level. You are very experienced. You look at the content, so basic. I done nothing. Don't worry, tell us. We will refund you back everything within 30 days, okay? So they let us know if you never add value for you. I always believe that if I don't add value to you, I don't deserve your money. Okay, I don't deserve your money. Okay, so just go for the 30 days money back guarantee. Okay, so now you're left with 2 choices. First, of course, you can do nothing, right? After this webinar, you go back to your usual life, okay, and life goes on. Okay, nothing changed. All right, if you're happy with it, go ahead. All right, but what if you go for second choice? You give it a shot and it dramatically change your life. Okay, you started to experience or receive more passive income, and that is a choice that you realize that it's one of the most important decisions that you've made because it changes your life. Not only changes your life, but your family life, because it's going to help you to pay your future expenses. Okay, so these are the two options that you can go for it. Okay, so I think give it a shot. It's 100% risk free. Okay, if you are not sure, you can always ask for money back after that. Okay, so that's why there's no risk for you. I want to remove every resistance that you might have or every obstacle that you might be thinking, so that you have you go for it. All right, just go for a leap of faith and go for it, and you will know whether this is for you or not. Okay, so yeah, and I just want to let you know that you got to plan. Okay, if you're not, I mean, you may have getting a good active income now. You are very comfortable. You stay in you have a good house, good car. You're not worried because your active income is still coming. But remember, one day those active income will disappear. Okay, that's the time where you realize that how important passive income is. Okay, now you may not realize it because you have active income, right? But passive income is the one that's going to pay you for the rest of life. Okay, because it's the one that's going to pay for your retirement, for your future expenses. If anything goes wrong, okay, this is the strategy that you realize that is going to change your life. Okay, so I mean, some of you may think that, oh, I 60s already, is it too late? Actually, if you are 60, even better, because you have more capital than a lot of people who just started up. Okay, when I first started out, I started out with $3,000. Okay, to be honest. Okay, so yeah, and yeah, so I think that's what I have for you today, actually. Okay, I hope you guys learn a lot, and if you do, let me know also. Okay, or if you have any question, I'll just stay back to answer some of your question that you guys may have. Okay.
Okay, thank you, Rusmin, for your session. Fantastic, sharing a lot of things on the dividends one. So I think he also answered a few in the Q&A tab as well, and also in the chat box. And we are running short of time, so I already posted the link in the chat box. So it's only 588. Just now Rusmin mentioned about sending the kids to Phoenix class, right? I resonate with him. I also send my girl to Barry's, okay, Chinese enrichment class. It's 1 quarter is already $800 plus. So what is this 588 for a lifetime, right? Correct or not? Okay, so yeah. So this is the commitments that is an e-course, okay? Tong, this is an e-course, right? Rusmin, right? Inside.
Yeah.
So there's no
The
commencement
webinar will
state.
be held in Singapore, of course, online, so you can attend it anywhere. And nowadays, I can tell you that people prefer attend live webinar. They tell you physical, they say, no, I want to do it online.
Okay, so I post the link once again in the chat. Okay, Jeremiah, are you there?
Yes.
Thanks again, Rusmin, for your sharing.
Thank you.
Thank you so much, Rusmin and Alex. And we are just about coming up to the last session of the day. So the last session of the day is going to be starting at 4 p.m. sharp. And it is actually our keynote speaker. So our keynote speaker is none other than Stephen Goldstein. Alex, maybe you want to share a little bit more about Stephen?
Yeah, Stephen just actually launched his new book, also the same title, Mastering the Mental Game of Trading. And he's one of the best kind of trading coach, performance coach, peak trading coach in the industry. So I've quite looking forward to what he has to share in the session. So see you guys in just a few minutes time. I already posted the link in the chat. Okay, so don't stay in this room. See you later.
All right, we'll see you later. Click on the Zoom room and we'll see you at 4 p.m. sharp. So
Bye-bye. See you guys.
Bye-bye.